Okay, folks, welcome to the best stock picks for the coming week. Let's take a look at the S&P 500 daily chart. And you can see that we put in a all-time high last week, but we failed to close there. And it wasn't really that much of a shock because you had the stock market rallying to all-time highs on very, very light volume. And on Thursday afternoon, I sent out a chart to my members warning that the 30-minute chart, the intraday chart, and in particular using the oscillator, the stochastic RSI, was looking very choppy. And whenever you see choppy action, like you saw back here, you see a market begin to break down. And what we saw all throughout last week was choppy action, despite the fact that we were rallying to all-time highs. What happened on Friday? The chickens came home to roost, and we pulled back some, and we failed to hold all-time highs. Now, does that mean that the path of least resistance is now down? No, it does not. The path of least resistance remains to the upside in favor of longs. However, we're going to continue to do what we do best, and we're going to play both sides of the market. Now, if you check on StockTwits or Twitter last week on my best stock picks, I mentioned that BITA was a short. And what happened last week? It corrected from 84.99 all the way down to 75.75, despite the fact that the S&P 500 was breaking out to all-time highs. Check it out. Those picks are still on StockTwits, Twitter, and on YouTube. Another stock that I called as a long was NDLS, and I'm surprised. Usually I get a lot of flack for saying to short stocks, and this is one that I longed, and I got a couple of interesting replies thinking that you're nuts, man, basically is what they were saying. The stocks are short, and that's fine. It takes different opinions to make a market. I welcome any type of debate as long as it's civil and professional, and all the debate that I received was definitely civil and professional. Really good stuff, and I like to be challenged, so it's all good. So keep the feedback coming, and thank you. So we pulled back last week to a low of 28.46, and last week I said NDLS was a long. Sure enough, we saw a bid at 20.46, and we rallied up to 22.58, a nice rally on the week. Another stock that I mentioned as a short was China Mobile. The stock had gone parabolic, was obvious a short squeeze, and the stock corrected from 62.20 down to $60.47 before finding support. It filled the gap here. RSI was as high as almost 90, and it was a fairly safe short. But the message to my members was this, and even on StockTwits, don't expect any of these to be going to zero or to be halved. All we want to do is look to take some of the froth off of the names and watch them correct and then move to the sidelines. Same thing with NDLS. Do I think that NDLS is going back to its all-time highs? I have no clue. All we wanted to do was take advantage of the extreme oversold condition, allow the shorts to get squeezed, and then move to the sideline. Let's take a look at some of the stocks that we're looking to trade in the coming week. First stock up is PERI Holding, PERI the symbol, NASDAQ traded stock, RSI is at 18.64. Now, the key to trading stocks like PERI is to identify where historic support is. And if there is no historic support, you need to use your daily and intraday charts to identify the best risk to reward entry point. So we have PERI trading with an RSI of 18.64. The key is to look at the weekly and monthly charts to, again, identify good risk to reward entry points and identify where our support levels are. I can tell you I like the slow stochastics. They're like a coiled spring. ADX line, very, very overbought. Volume to the downside is declining. We know we have resistance up here at 7.32. So I'll be going over with members on the week ahead commentary, the focus stock analysis video, where we believe the best risk to reward entry point is, where we believe the stock is heading to, our target price in the short term. Again, do I think that we're heading up to 13.75 anytime soon? No. we're looking to trade the stock as a swing trade, take advantage of a short-term inefficiency in the marketplace, book our profits, move to the sideline. Next stock up is DNDN This is another one where we want to take a look at the monthly and weekly charts, identify our best risk-to-reward entry point. It's obvious that we had a great key reversal on the 13th. At a bare minimum, we're looking for a higher low or a retest of the 1.24 level. Volume to the downside is dropping off, very interesting. But this is another one where we want to pull back, identify historic support, then go into our intraday charts, look to see if there are any divergences setting up, and use our daily charts to identify bottoming action, a sign that there are buyers below, because we're firm believers that the markets send us signals. And if you pay attention and listen to what the market is telling you, you don't need to worry about traders with algorithms. You don't need to worry about manipulation of the stock by traders. If you're astute enough to observe what the charts are telling you, what signals the markets are sending you are, like we did back here with BITA, RSI at close to 90, or with China Mobile with RSI close to 90 and flashing doji star formations, signs of a short squeeze, which are finite in nature, and the fact that this is completely unsustainable, this uptrend, and that the risk to reward has changed to our favor. If you pay attention to these inefficiencies in the marketplace and take advantage of them, well, then you can make some real serious money in this market. And that's what we're waiting for with DNDN, and that's what we're waiting for with PERI. Same thing with SUSP, SWIR Petroleum Partners. RSI is at 87.19. Very bullish day on Friday, but the market has been sending you signals for a couple of weeks now that you have sellers above here, as noted by these topping tails. So this is one where we may be looking to short in the coming week, and ideally the shorts get squeezed further, because we certainly don't want to be a part of the crowd that is getting squeezed. We want to watch them get squeezed, and then as they get squeezed and panic, that's when we want to get involved. Next stock we're looking to open as long as SYNC, Sync Inc. Flashing some bottoming tails here. Bad reversal day on Friday. Obvious resistance at $2 per share. I'm going to want to take a look at monthly, weekly charts for a historic support level. If none exist, well, then we're going to watch the daily and intraday charts for a good setup. RSI is currently at 19.69, barely making it onto our screener. And on the focus stock analysis video with members, we'll discuss what our catalyst is to the upside. Is it that there are a ton of shorts in this name looking to get squeezed? Possibly. Does it have such fantastic fundamentals that the market is not appreciating the fact that it's selling at a discount? Possibly. But those are the topics we'll be discussing on the week ahead commentary that the charts don't show you. But we will also be discussing multi-period charting on the week ahead commentary as well. Last stock up is Sierra Wireless, SWRI. RSI is at 88.04. Topping action seen early last week, I should say mid last week. 50-day moving average has crossed above the 200-day moving average. Very bullish event. We need to discuss on the week ahead commentary, what does that mean for the stock? Where does the stock sit on a historic basis? Are we breaking out, or are we at resistance on a historic basis? Those are key questions that we need to answer before we decide to get short of SWIR. And I have a pretty good story to tell with this one, because I believe that it is a short-term short, but a longer-term long. It may sound confusing, but I'll be discussing that with members on the week ahead commentary. Just to clarify, right now these volume bars are implying that we have institutional accumulation. We certainly don't want to get in front of institutions who are buying. That is the death knell for any amateur short. We are not amateur shorts. We will allow the big boys to continue their buying, and then we will look to pick at the carcass of shorts who were foolish enough to fight them. And that's it, folks. If you're watching this on my website, please enter your email address. You will not be spammed. You'll get these videos in the future emailed to you along with our post-trade reviews of stocks that we recently traded. And it's not just stocks that we made profits on. You can go to my website, click on recent trades, and there's stocks on there that we lost money on. But if you don't pay attention to your losses, you'll never identify your mistakes so you do not repeat them. So I digress. If you're watching this on StockTwits or Twitter, please follow me. StockTwits is a great service. I really prefer it over Twitter. So please follow me on StockTwits. If you're watching this on YouTube, please subscribe to my channel. And everybody have a profitable trading week next week. Enjoy the remainder of your weekend and focus on the signals that the stock market is sending you on the charts. Don't listen to CNBC. Watch the charts. Take care, folks.